Question number 15 now. Please read question number 15. Please read question number 15. A Limited raised a loan of rupees 10 lakh whose interest rate is 10%, which is payable at the time of settlement after 3 years, which means that the entire 10 lakh will be paid after 3 years. Total amount payable would be, entire amount is payable after 3 years. So on 10 lakh you have 10% interest, means 1 lakh rupees per annum. 1 lakh rupees per annum. 1 lakh, 1 lakh, 1 lakh. 13 lakh will be paid after 3 years. That is how they have computed. A Limited incurred rupees 40,000 as expense to raise the loan. Tax rate is 30%. Expense of rupees 40,000 qualifies for tax deduction immediately. Qualifies for tax deduction immediately. A further tax deduction of rupees 3 lakh will be claimable. A further tax deduction of rupees 3 lakh will be claimable when the loan is repaid after 3 years. Further deduction of 3 lakh will be claimed after 3 years when the loan is repaid after 3 years. Calculate the deferred tax asset or deferred tax liability. A very interesting question. Now in this problem, income tax law does not recognize effective interest rate method, amortized cost method. For income tax purpose, the 40,000 expense you will incur will qualify as an expense, and the 3 lakh rupees interest will be allowed as a deduction when you are going to repay the loan 13 lakh. Out of that 10 lakh will be principal. 10 lakh will be principal. Anything above 10 lakh will be allowed as deduction. Anything above 10 lakh will be allowed as a deduction over here. So that will give rise to our temporary difference. Let us see. But first what I need to do, first I need to find out, for the purpose of carrying amount calculation, for the purpose of carrying amount calculation, I will follow IND AS 32. I will follow IND AS 109. It is a loan. It is a financial liability. I will follow amortized cost method, and for that I need to find out effective interest rate. Effective interest rate means that rate of discount at which present value of future cash flow is equal to fair value today. Fair value today will be proceeds minus transaction cost 40,000. So today we will get 9,60,000, and after 3 years we have to pay 13 lakh. This is my two cash flows for accounting purpose. You get 9,60,000, you pay 13 lakh. Every year we are going to account for finance cost. So we are going to recognize finance cost, finance cost, finance cost, and after 3 years my carrying amount will become 13 lakh. I'll pay the loan. I'll pay the loan, matter closed. Is it right? So let us write. First we'll compute EIR. Then we'll compute the carrying amount at this point of time. We'll compute the carrying amount in the books at this point of time. income tax will say 10 lakh rupees will not be allowed as deduction. Anything above 10 lakh will be allowed as a deduction. So the future deduction allowed will be equal to any amount above 10 lakh. Up to 10 lakh principal amount will not be allowed as deduction. Amount above 10 lakh will be allowed as deduction in future. So please write step 1, calculation of net cash inflow. Calculation of net cash inflow. Under that you write down proceed minus expense to raise the loan. Student will remember we have done one chapter financial instrument. For a liability which is measured at amortized cost, we record the liability at proceed minus transaction cost. 10 lakh minus 40,000, 9 lakh 60,000. Now we have to find out EIR. For computing EIR, we use IRR method, interpolation method. Interpolation method means we have to find a discount rate at which the PV of inflow will be equal to PV of outflow. Since you are a good student, if you are going to raise 9,60,000 today and you have to pay 13 lakh after 3 years. This is year 0, this is after 3 years. So what is your effective interest rate? What is your effective interest rate? So we have to make a guesswork. It will be somewhere close to 10 or 11%. It will be somewhere close to 10 or 11%. Because in any case the coupon rate itself is 10%. The coupon rate itself is 10%. Understood? Write down. Directly write year 3. Contractual cash flow 13 lakh. We will assume 10% as a lower discount rate. 10% third year factor 0.7513. Multiply please. The present value is 976709. Then take 11% factor. Third year 11%. 0.73119. 0.73119. Present value 950509. And our initial amount was 960. These two numbers are such that one is more than 960, one is less than 960. So IRR is between 10 and 11. We will apply the interpolation formula. 10 plus, write down below, IRR equal to 10 plus difference between this amount and 9,60,000 in the numerator, and difference between these two amount in the denominator. Today is not the time to teach you IRR. Already discussed in this chapter financial instrument, at least in 25 to 30 questions we have computed. Please compute. The answer comes to 10.63%. This is called effective interest rate. For accounting purpose, we are going to recognize finance cost at this rate. Income tax will allow you entire interest deduction in the last year. Income tax will allow the entire deduction in the last year. So write down the loan account amortized cost method. Some revision of IND AS 32. Okay, little fast. On the credit side, first you write down by bank 10 lakh and to bank expense 40,000. If you want to write one single figure on the credit side, then you can write by bank 9,60,000 directly. At the end of the year 1, you will recognize finance cost at the rate 10.63%. It comes to 1,02,048. No payment was made in year 1. Directly entire 13 lakh will be paid after 3 years. Okay. So now my answer is 10,62,048. Year 2, come on, year 2, buy balance brought down, buy balance brought down, buy balance brought down, buy interest 10.63% of opening balance, 1,12,895, to balance carried down, 11,74,943. Check the balance, and then buy balance brought down, 2 lakh, 11 lakh, 74,943. In the last year, what you do? Make interest as a balancing figure. Make interest as a balancing figure, because I have to pay 13 lakh. Because I have to pay 13 lakh, make interest as a balancing figure. To bank 13 lakh, interest will be balancing figure. Interest will be balancing figure to bank 13 lakh. Is it right now? So this is my carrying amount. Last year there is no carrying amount. Last year carrying amount is 0, it is paid. Income tax will not allow you 10 lakh rupees of deduction, because that is principal amount. So how much deduction will be allowed out of this 62,048? Out of 10,62,48, please guess what will be future deduction allowed. What will be future deduction allowed? Out of 10,62,048, the future deduction allowed will be 62,048. 10 lakh principal amount is not allowed. Over and above that, similarly in the second year, 10 lakh will not be allowed, but 1,74,943 will be allowed. 1,74,943 will be allowed in the future period. Is it right? So that way we have to compute the deferred tax. It is a question of a liability. My carrying amount is calculated using the IND AS 109 or 10, or you can say 32, using effective interest rate method. The income tax will not allow principal amount as deduction. Whatever is above the principal amount will be allowed as a deduction. So tax base will be carrying amount. Carrying amount is right. Already we have done accounting. Future deduction out of this would be anything in excess of 10 lakh. 10 lakh principal amount will not be deducted. So 62048. 62048. That is 10 lakh, and therefore deferred tax, deductible temporary difference. Deductible temporary difference will be 62048. 62048. 62048. Tax rate 30%, and therefore deferred tax asset. Therefore deferred tax asset will be 18614. Deferred tax asset will be 18614. So that is a huge important impact on our accounting system now because of IND AS. Is it right? Because when you are in intermediate, you are not passing such entries. Now you have to pass such entries, because of which there will be a difference in the treatment of books of account and the treatment for tax purpose. Question number. Hello CA final student friends, we have come out with CA final FR regular video lecture in English language. You can purchase from our website vinod.in. Along with the class notes, you will also be provided with summary chart and MCQ book. The price is only ₹5,999. You can purchase from our website. You will get 5-year validity also. So this is a very good opportunity to learn FR conceptually in detail. From our website you can purchase at 5,999 vinod.in. Thank you very much.